Okay, so we're back with another market open live stream. US30 chart. You know, we had some jobs data coming earlier today, so it showed that the US economy added 42,000 jobs in October, according to ADP jobs data. This is one of the few jobs data we're still receiving, considering the US government is still in shutdown, and so hopefully the market takes us the right way. That's what I believe we're going to see today potentially. That being said, we're still going to conduct our pre-market analysis so we know exactly how we're going to approach the markets today. And just so you're aware, we're live every single day, Monday to Friday, 8:30 Eastern Standard Time in the UK. That's 1:30 Eastern. That's 1:30 GMT. So I go live every day, and yeah, you get to see what it looks like to be a profitable trader, how I execute, how I analyze and execute every single day, my level of consistency and my level of discipline. You get to watch me live, and if you want to ask any questions as well, you can do so as well. So yeah. So just going forward, as before we conduct our pre-market analysis, I just want to talk about the decline that we saw that took place over the past, I think it might have been 7 days now. So last week Wednesday we started this decline, and my belief was that we was going to come down and target liquidity down here and down here and down here, potentially even down here. However, we are in a bullish trend, and it doesn't really make sense to try and call tops in the markets. And so if we see price come into this area here, which is an order block, this candle right here constitutes an order block. We're also inside a fair value gap, which is this area right here. From here and to the top of this candle, it's a gap, so we call that a fair value gap. And then even above here, all of this is also an opening gap. So this is really a bullish place to be buying. This is a great place to be buying. This is really what the gap is supposed to look like. However, we like to fine tune it. Once price makes a more decisive move, we like to fine tune it, and I fine tuned it into just being the top of this order block and our fair value gap as well. So that's perfect place, and as you can see, the market is respecting that area. And so going forward into the session, I am somewhat more bullish, and I'm going to tell you why I'm bullish. The main reason is, it's silly to try and call tops in the market. If I do have a potential short trade, as I did over the past couple of days, I was completely happy taking the position, and I made 6R on the trade, and I'll show you that was my trade from yesterday. Or it was more like 5, or it was this trade right here, and I was able to catch about 500 pips, about 600 pips, from 7.7, we'll call that 777, down to 1, we'll call that 177. So that's about 600 points I was able to catch, obviously excluding my total swap. But it was a massive short trade. But I was able to catch this short trade in a bullish market because it's a part of my system, and I've back tested the system. I know how to look for trades in the direction of, even regardless of whether the market is in a bullish trend or a bearish trend. I know how to look for positions against the trend, and because these are against the trend, they're lower probability trades. As long as it plays out in the way that I've been looking for, I'm allowed to position and take the trade, and that's what we found was the best way to approach it this over the last week. And I took that position on Thursday last week and closed it out yesterday. And so just because I took that short position doesn't mean I should now ignore the fact that we are still in a bullish trend. And that allows me to continue to say, the trend is your friend. You don't want to trade against the trend. If you see an opportunity to catch a quick scalp within the uptrend, so sell from a high down to a low, a scalp, that's perfectly fine. But when it's time to begin to try and reposition to back into bullish market territory, when you see the market is potentially providing you an opportunity to get long, then you need to find that opportunity and you need to capitalize on it. And so that's what I'm looking to do today. We'll just start off by going through our pre-market analysis so you guys can see what my thought process is for the day. I haven't actually done my pre-market analysis, but my belief is that we are going to be looking to shift our bias to more aggressive bullish stance. And I'll explain to you why shortly. Alright, so first things first, what we want to do is we want to analyze and figure out what kind of trend we are in. What's the market type? And my belief is we're in a bullish trend and our external targets are the highs. And so I'm just going to mark that out on there. And the reason we're in a bullish trend is because, as I said, we are making higher highs and higher lows. And so last week we was able to get into a position short and so last week we was able to get into a position short from up here, and we was aiming to close this gap for one, but also the idea was to try and target these low levels of liquidity if this gap was broken. And we came into this gap and we wasn't able to close below. It was only able to close the gap, it wasn't able to continue down. And so we're going to watch out for what happens today. There is a potential chance we do come back down. Obviously, in order for us to position, we're going to want to have a sweep of internal liquidity, which is our previous day's lows and previous session lows. So we're going to want to see price come back down to our previous session low, which is London session right here, and Asian session down here. My belief is that we don't target Asian session, but we're going to want to see a price come back down to here, and when it does, we're going to want to buy it. That's the idea, considering we're still in an uptrend. And so our targets are going to be external highs, and our external highs is going to be up here. And the reason we know that is because this was our previous external high that we believed got taken, but we didn't have the type of aggressive move down to close us back into the range. And we saw that yesterday, we closed slightly above the range. And so what we're going to look for today is to see a rally as a break and retest. So this is going to look like this. It's going to look like a rally, a pullback to retest this high, and then we continue higher. And that's what we're going to be looking out for over the next week or so. The bull trend seems to look like it's still intact to me. It doesn't look like we've done any meaningful damage to the trend, and based on that, we're going to continue to buy this market up if the opportunity presents. And so moving forward, we're going to obviously get rid of the idea that our reversal signal has taken place, and we know that we're still in an uptrend. And that's the beauty of trading US30 and trading other indexes like the Nasdaq, the S&P 500. The market just tends to trend higher, whereas when you trade currencies, you get caught in these wide ranges, which does make it a little bit harder to trade and less frequent trades. But when you trade US30 every single day, you just go into the market looking to get positioned, and that's the beauty of it. Alright, and so going forward, we know we're in a trending market. So now this is the main event. We want to identify our liquidity map for the day, and I've pretty much done most of this for us already. And so taking a look at our liquidity map, we've already spotted our important fair value gap, which we've marked out right here. This is important level. We're going to keep our eye on that. We're going to want to mark out internal levels of liquidity. Levels of internal liquidity, and we'll hop down onto the 15-minute chart just to see. And so if you take a look, we've got, some people may call this an order block, so I'll mark this out as well. May call this an order block. And so this level's probably going to be important, but we'll count that as this level of liquidity down here. And so our internal levels of liquidity are going to count as our London session low, and we'll see if price reacts from this area. And if we get a bullish reaction from here, then we'll ignore the Asian session low, and we'll hopefully just see the market rally higher. At the very worst, at the very best scenario would be a decline aggressively below this level, tap into this box, and from the tap we just see a bounce, an aggressive bounce, and that's what we'd want to see into the session. Alright, so now we need to look for our session highs and session lows. We've got Asian session high and Asian session low. Not what I mean is we want to look for our previous day's highs and previous day's lows. And so this is also important. So if we're bullish, we're going to look for liquidity at the lows. So we're going to also keep that on the chart. And so if the market does come down to here, if the market decides that it wants to continue much lower, which is still a possibility, we could potentially target our previous day's lows, and so we'll keep that on the charts. Alright, so going forward, we want to look for our hourly and 4-hour order flow to see if it's in confluence with the overall uptrend. And so as you can see, the hourly chart is currently in a bearish trend. It's somewhat consolidating, but when I say it's in a bearish trend, what I mean is we've come down and then following the decline, we've somewhat been trading sideways, as we're now potentially planning to continue down as well. And so if we see the market go down, clear this level, clear this level, clear this level, that could be enough for us to see a rally after that level gets swept from here and continue higher. And so we'll watch out to see what happens over the session. Going forward, let's take a look at the 4-hour. And so the 4 hours is also in a sideways trend. It's not currently going anywhere, so price action is a bit musty today. But the idea is that we've been trending downwards, and because we haven't actually made a higher high on the hourly chart or the 4-hour chart, there is a chance that we just continue to see downward movement, because as you can see, we haven't actually made any defining moves to break the trend into an uptrend, and so there is a potential that we just see the market continue down. But that's not the base case. We'd want to firstly see whether or not price comes down and taps into our order block to give us the opportunity to buy the market back up. That's the most ideal scenario. And so we'll just mark out here really quickly. So the hourly chart, and 4-hour trend is not in confluence. Overall trend, making it more difficult to commit currently to buy trades without a break block. And so what I mean by this is, because we're somewhat trending sideways in this current trend, because we're currently trading sideways in this current trend, what we'd want to see is ideally we'd want to see price come down, sweep some of these levels, and then break out to the upside. And this breaker block candle, this sweep of liquidity is what we'd anticipate would be would lead to the breakup block candle, and so we'd want to see a sweep of liquidity before we position, and then after the sweep, given an entry, we'd hope for a breakup block candle to confirm the trade idea, and then a massive rally to resume the uptrend. And so we have a few small levels on the chart which could potentially be a hindrance to our upward move, and for that reason we're going to take it patiently. We're going to be patient with our potential trade idea. This I don't consider to be, because this candle's just recently closed on a 4 hour, I do not consider this to be a meaningful break, and therefore this cannot qualify as a shift in market structure. And so we need first for our London session lows to be targeted before seeing a breakout to the upside. And then if that was to happen, if we saw London session targeted and we broke up to the upside, any meaningful breakout to the upside would constitute bullish trend, and so that's what we're looking out to see. We've got about 30 minutes until the market opens, and so we'll keep our eye on the chart.